Hello, everyone. This is Martin. Welcome back to another weekly update, and we're going to take a look at the trading opportunities for the month of April and the week of the 11th to the 15th. Okay, and the theme really for this week is we're going to continue watching the JPY pairs, the Japanese pairs, for trading opportunities. Last week, the Japanese pair showed quite a bit of strength against some of the other major currencies, and so this week we're going to keep an eye out for these, and especially some of the cross pairs. I think that's where we may see some more movement. So as we go along on this video, I will point out the Japanese pairs, and also we're going to look at some cross pairs as well. Okay, so first of all, we're going to start off with the Euro USD weekly, and we are going to, as always, start off with what I call top-down analysis. Going to look at the charts on the longer time frames, starting with the weekly. Then we're going to go down to the daily, and finally we're going to compare that to the LEOD charts, which stand for lazy end of day trading. Okay, so we're going to start with the Euro USD. Okay, here we've got the Euro USD weekly, KISS, keep it simple, chart. And you can see this is a weekly chart. We broke out the previous week right here with this white, large bullish candle. And price, I kind of thought would go a lot higher. However, it's kind of stalled. And you can see last week, this is the weekly chart. You can see last week, this is a little doji candle, which means the entire week from the starting with the trading day Sunday, Monday, all the way through the close on Friday. Basically, price just didn't go anywhere except sideways, and I kind of expect the same thing. So last week, in my last week's video, I said wait for a breakout or pullback continuation. Okay, that really didn't happen. We didn't really have a really good pullback. We didn't have a strong breakout as well. I'm going to go down to the daily chart, okay, and you can see that right here. Even though the MACD is above the zero level, you can see that price over here just went sideways 1, 2, 3, 4, 5 days after the previous Friday close here. So I started off the Sunday Monday trading, went down a bit of a doji, another doji, another kind of a spinning top here. Basically price just went sideways. We didn't really have a pullback, like not in the classical sense. I mean, yes, you could have placed a pending buy limit order right above here somewhere, but again, that would have been guessing. And if even if you would have gotten in, you might have made just a few pips, or you might have lost some pips. So last week did not present any good trading opportunities. Again, if price comes down a bit more, then again, we have to look at um, bullish evidence to the upside, because there's still room to go up. I don't know how much further, but I mean, even from if price breaks out above here, we still have at least 90, 100 pips to go to the upside, but price seems to be stalling out. Now, take a look down below at the MACD. I've done what's called, I'm showing you MACD divergence, okay? You see the high right here of this trigger line, the red trigger line, see the high here. So far, this is the lower high. This is lower than the previous swing high here, and yet price has gone higher on the chart. So it looks like we're stalling out here. We're coming near we're almost exhausting. Prices almost seems to be exhausting here at the top. Price may roll back down and come back down further down to this trend line, but again, it's a wait and see situation. So I'm really saying hold off. Let me go back to the weekly. So this week, we're still in an uptrend. However, we're going sideways. Wait. Caution, you have to look for evidence. So if price goes down, then look for continuing upside if there's evidence to that. And if price goes up from here on the daily chart, then you basically want to look for a breakout. But I would kind of wait, breakout above here. I wouldn't really get in at any point soon. Okay, so now we're going to quickly go to the the LEOD charts, and you can see that price has really gone up away from the two yellow lines. Um, right now, it looks like the blue RSI line is starting to come down below the sentiment line. Okay, even though we're in an uptrend, but price is just going sideways. So we want to just wait and see. This is a wait and see pair. The next one we've got is the British Pound USD. Okay, here's the British Pound USD weekly chart, and this week we're kind of still in a downtrend, although the previous week, well, coming from the previous low right here, we had gone up, but we're still kind of in a downtrend. The MACD is below zero, and I'm looking for selling opportunities. However, we basically have to wait and see. And last week I said we were going sideways. I asked you to wait for a breakout, or for you to at least look for a breakout. And let me go down to the daily chart. Okay. So let's take a look here. So with the this is the close of the previous Friday right here with this red vertical line. You can see the Sunday, Monday trading right here with the white bullish candle, and then from there we went down, down, down. And so where was the selling opportunity, as I had mentioned for last week? Well, let's take a look. Here, there was the pullback. Once you see a white candle, okay, that's regarded as a pullback, even though that in this case it was only a one candle. But take a look at this candle right here. Isn't this what we call an engulfing bearish candle right here? Bearish engulfing candle completely engulfs the previous white candle. If you would have gotten in at the open of the next candle right there, okay, that would have been good for at least 116, 118 pips. So again, watch out for bearish or bullish engulfing candles at areas of support or resistance. In this case, this candle was formed at the resistance here. Price went down below support, which now turns into resistance. You know, with the moving averages, and the next candle was an engulfing bearish candle. So great opportunity for a trade entry right there, and you would have caught that on the Tuesday. So this the white candle here, Sunday money trading. This candle, the engulfing candle, closed after Tuesday, and so Tuesday evening you could have got entered in right here. So this would have been the Wednesday trade, the Thursday trade right there. Okay, MACD is below zero. It looks like price is going to be going down lower. I mean, we are in a channel. You can see the trend line here, the trend line here. Let me go back to the weekly. Okay, you see the okay, so I've drawn the a channel here. So price uh, could be going down lower, but again, um, what you want to do is wait for a breakout, and by that I mean right below here. So I'm gonna just point that out for you, right about there. Do you see that? You can take a sell stop order right below that, and then you've got room for a lot of pips to the downside. Most likely, it could go down to retest the previous swing low right here, but that's good for at least 100, 130, 140 pips, okay, from here to here. Okay, so now we're going to quickly go to the LEOD, and you can see we actually the opportunity to take a great trade was right here with the close of this candle. You see this black candle right there? Okay, that closed below the yellow, lower yellow line. This candle also closed below the trend line. You see the magenta trend line right there, or the pink trend line? Okay, getting in at the open of the next one would have given you all the pips that we talked about with the other chart. And you might think, well, here's a previous low. If you would have still, even taking a look at that with the previous low, I'm going to draw something for you right there. Okay, so getting in after this black engulfing candle right there, you still would have made 90, 100 pips if you were worried about the previous swing low here. However, price went down a little bit lower. And getting in right here, as you know, the stop loss would have been just above the top yellow line right there. You can also see down below, the blue line is below the bottom 45 level and below the yellow sentiment line. Okay, so moving right on to the Australian USD weekly. Here we can see an uptrending channel, okay, and price kind of last week was a down week, so a bearish week, and price could be going down a little bit further. Again, what we want to do, we're in a sideways mode. We're going to take a look at the daily chart in just a second. This is the weekly, so it looks like price last week went sideways. Here it is. This is the trading week last week after the red vertical line. And so what we want to do is either, this is an if or then situation, wait for price to break below the support of the gray rectangle. Okay, so in that case, you would be placing a sell stop order below this support area, or waiting for price to break out to the upside. So waiting for price to break out here, okay, and especially above the high of this black candle. You see that right there? There you could park a buy stop order. So that's what you're looking for. With this situation, if price goes higher, then you can take an order, a bullish order. If price goes down lower, you wait and see, look for evidence for price to go down lower, then take a bearish order, and you've got, either way, you've got room to move, okay? In this case, the MACD is above zero, so we're still in an uptrend, and the bias is to the upside. However, again, you have to wait for price to at least break above this trend line, which I've drawn in for you, and especially in this area right here. Okay, so the area above would be somewhere. Let me just draw that in for you. Oh, it's not not picking up the indicator. There we go. So let me just do that. Okay, so somewhere above this area, somewhere above the price, 76.40. Okay, for the upside. So that's the Australian daily, and oh, I want to quickly go for this week again. That's what I mentioned. Upward, sideways. You kind of wait and see. You can see on the LEOD, it shows you almost a much clearer picture. Prices come in between the zone, between the no man's land, which is the upper yellow line, the bottom yellow line. So once price is in there, in between, you're waiting for something to happen. In this case, prices up here above the yellow line. We're anticipating price to follow through and come below the yellow line. So we're waiting for a breakout, one black candle to the downside, and if right now, let's draw in a trend line. Okay, let's draw in something. Let's draw in another trend line. So we're looking for peaks and valleys. Okay, there it is right there. So here is the most recent valley. Okay, you see the valley right there. And what we're looking for is a candle to close below here. As a matter of fact, I can move this down here because this is a valley too. A down candle, up candle constitutes the valley. So we're looking for another black candle, bearish candle to break not only the trend line but below the yellow line, and waiting for the blue RSI to come down below the bottom or the lower 45 level. You can see that right there. Okay, so right now, wait and see. Now we jump to the New Zealand USD, and on the weekly chart, again, another situation exactly like the Australian dollar. You can see last week we had a bearish kind of candle. I can zoom in a bit. You can see that's a bearish candle. So in other words, last week we went sideways or down from the previous week's high. Let's switch to the daily, and you can see from the previous week's high right here, price just went back down, 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 down. And in fact, last week proved that the New Zealand dollar was one of the weaker currencies. Okay, and so possibly this could be a great currency pair to trade against Japanese yen. That pair in question would be called the New Zealand Japanese yen. Okay, we may take a look at that in a few minutes. So here we've got a complete pullback. Okay, so take a look. The major uptrend is up. Okay, that's the major, and we broke above the resistance here. You see with this gray rectangle. So once price broke above that, we're in an uptrend, and we were kind of expecting price to come back down, pull back down to here, perhaps to retest the previous swing high, to retest the support, and then maybe bounce up higher again, but it didn't. In fact, it just plummeted right back to Earth. So this rocket ship is not taking off. And what we want to do, again, it's a wait and see situation. We want to wait for more white candles to push price above this trend line, which I've drawn in, okay, and above this most recent swing high with this big black wick, the black candle and the tall wick above it. You see that? That's on the previous day. Okay, and above this resistance area that's designated with the gray rectangle. So basically anywhere up here, if we have a close up here, then we most likely price will go continue higher. Or you can place almost, you can look at a counter trend trade if price breaks below the trend line and comes below the previous lows right here, like somewhere in this area. Let's take a look. Somewhere below 67.50, then price most likely will come back down to here and maybe even retest the 100 moving average. So again, this is a wait and see situation. Just wait. The LEOD, well, this confirms what I just said. Price had been in a long trending bullish channel. You can see with this upper trend line, the lower trend line, they're both in pink or magenta, whichever way you want to call it. And you can see price has gone up high, touched the high trend line here, and it's come back down. We're now in no man's land between the high yellow 20 EMA, the low 20. So price is bouncing sideways right here. This is a daily chart, and we can expect price either to go down further, or we can anticipate price bouncing off this area and going higher. That's what I mean by wait and see. So you can only um, uh, wait for price to go higher above this previous candle right here. Okay, and you would place a buy stop order or somewhere down below. You want to wait for price to break at least below the lower yellow line right here, and then look for a trade to the downside. Okay, now we move to the USCAD weekly. This one seems to be going down. We're in a bearish sentiment, and you can see the MACD is now crossed the zero. When the MACD histobars crosses zero, we basically are having or getting close to a change in direction and momentum. Um, so you have to just be careful about this. What you want to do, and this is the weekly chart. We're in a downtrend, I'm saying, and we want to sell. You can either sell right now, and you may think we're close to support, but we've still got a long way to go. And I'm going to zoom in on a chart in just a second to show you that we do have some room to the downside, or wait for a breakout. And so that's the conservative thing to do. Wait for price to come below this gray support area right here, placing a sell stop order there. But now let's zoom into the daily chart. Okay, so even if you take a sell trade right now, and let's say you were a little bit aggressive, hoping that the Sunday, Monday open or Tuesday would take price down, you still got about 100 pips to go. Okay, I believe if price is going to continue going down further, because of bearish sentiment in the market, then you've still got about 100 pips, but it's a short-term play. Just remember, if you do make around 90, 100 pips, perhaps you should close your order, or be ready to close as soon as price starts reversing. I mean, there's a lot of different things you can do. You can wait for price to retrace a bit, then take a sell trade, or take a sell trade once price breaks below the support zone that's designated or shown in with the gray rectangle. Okay, so there's a lot of things that you can do, and it's up to you depending on your risk personality. Okay, now the LEOD, well, perfect example of a LEOD trade in progress. Now this candle closed below the yellow line. This was the Friday, on the Friday here, okay? So with this close on Friday, that means you basically can take a trade, a sell trade right now at the open of the next candle, which would be the Sunday, Monday open, or you can just wait. And we still got a ways to go. Look at the previous low right here. So even looking at the previous swing low right there, opening up a trade here, you still would make maybe around 90, 100 pips or so. So just be careful. And here, the stop loss would be just above the yellow line here. The blue line is below the 45 level. However, it's not quite below the yellow. Well, it is actually. If you, I'm going to zoom in. Okay, there we go. You can see it's just barely below the yellow. So, and the MACD, the histo bars are below zero as well. So I would say, it's probably a safe entry trade to take, taking a trade, a sell trade right now, or waiting for a slight pullback and then taking a sell trade. Remember, this candle also closed below a trend line which I've drawn in, and looking at the previous trend line breaks, prices just keeps going down, down, down on this pair. So the sentiment certainly is to the downside. And also remember, Canadian dollar is tied into oil. Oil last Friday closed up really high. You're going to see that right now. This was, look at this, on Friday. This is the Friday close right here. Huge bullish candle, and I believe oil is going to continue going higher to at least meet up with the 200 moving average and even higher. So I believe that oil has the potential right now of going to at least this area right here, okay? And if not higher, but once it goes up to here and meets up with the 200, most likely it's going to come back down to retest the previous high. Okay, so that's how the Canadian dollar is tied into the oil. And now we're going to go right to the US Swiss franc weekly. Now, this is showing you something else, that the Swiss franc has gained a lot of strength over the last few weeks as well, especially against the U.S. dollar. And here, with this candle, okay, this is a weekly candle. Notice that it closed below the 100 moving average, and now possibly it's on its way down to meet with the 200 moving average, which is acting as a major magnet as well. Okay, so previous week we had, take a look at the previous week with this black engulfing candle. Isn't that great? Imagine that. Here's a black engulfing candle, and remember one of my lessons that a lot of you students got. I talked about trading with the big E, and the big E was the big engulfing candle on the weekly chart, and you can see what's happened after that. So getting in after the big E still would have given you well, 60, 70 pips so far, but I believe price is going to keep going down. MACD, taking a look below the chart, is below zero. On a daily, you can see right here, price seems to be going down. It seems to be trending lower. Okay, and what is it for this week? So it's a downtrend continuation. Last week I did say it was trending lower, selling the pullback, and certainly there were some opportunities for that as well, selling the pullback. On the LEOD, well, you can see again, this is the LEOD daily chart. We missed the train back here. Okay, actually, the entry was way back here. Imagine getting in here and riding it all the way down. That would have been good for at least 300 pips. However, this is what's called a, see, when price goes back, pulls back to the two yellow lines, and then you have an engulfing candle. Remember, this is the daily chart I'm looking at. If you have a golfing candle getting in right there, you would have made some really good pips. Here's another pullback, another engulfing candle, black engulfing candle getting in right there. You would have made some amazing pips. So here and here is what I call LEOD continuation trades, okay? So you don't always have to look for one candle breaking below the yellow, but you can look for continuation trade examples. Here's one, here's another one, okay? And blue line is below the yellow, but we've missed the boat. We basically have to wait for retracement back to see what could happen next, okay? However, as I mentioned on the other chart, the simple price action chart, it looks like price is still going to head on down further, okay? And now we get to the US Japanese yen. Remember, at the beginning of this video, I mentioned about the Japanese currency pair being one of the strongest last week. Here is a terrific example. Now, this is a weekly candle. Take a look at that, eh? Look at that huge movement all the way from here to here with almost no wicks to the top side or to the bottom side, right? So that means the sellers were completely in control last week and dominated a lot of the other currencies as well. So in their pairing, so I believe price here is going to continue going down further, down to the next major support area, which I've drawn in with this gray rectangle. So we're looking at least another 250, 300 pips, and then obviously to meet up with the 200 moving average, which is going to be coming right about here. So about 300 pips to go. MACD, the histo bars getting larger and larger away from the zero level, which means strength to the downside is increasing, and this is all as a result of this being a price being squeezed up and down in what we call a descending triangle, right? Here on the weekly chart, descending triangle means the highs are getting lower while the bottom triangle part of the bottom part of this descending triangle is at a static horizontal area. Price finally broke through, okay? And all of result, look at this huge weekly big engulfing candle about 2.5 months previously, right over here at a level of resistance turning into I'm sorry, support turning into resistance. Okay, you see that with the blue and the red moving averages. Okay, so I believe price is going to keep going down further. Um, but however, we want to wait for a pullback in this case, okay, and this is important because this was a huge movement. So there's most likely going to be a pullback first, so we want to wait for price to go up higher, and then we want to wait for some sort of bearish evidence to the downside. We want to look for one good bearish black candle to the downside, okay? So pull back, look for bearish evidence to the downside before we take a sell trade, right? Or, let me just move that out of the way for a second, or a sell stop order below that wick, below the low of this huge candle. So let's zoom in to the daily chart and you can see what I mean. What we want to do is, let me just grab this now. We want to take a sell stop order somewhere right below here, okay? And we're looking at a price level of below 107.20, okay? Or even below 107. So it's up to you depending on your risk level. And then if you do that, your stop loss would be, well, depending on what candle breaks through, but your stop loss could actually be above this high wick. This is a pin bar right here, or it could be above this, at least above this, in a conservative manner, this is a support area right here. So your stop loss would be way up here, but once price continues going down, then bring your stop loss right down, okay? So that's what I see there on the US Japanese. And on this one, this was good for 234 pips. Now, going back to what I mentioned last week I said we're sideways, but sell with evidence. Let's take a look. This is the daily chart. What was the evidence? Well, take a look here. Okay, so here, price with this black candle right there, you see that black candle? This is the evidence that I'm talking about. This black candle closed below this support area right here with the gray rectangle. Price is below the 8. 8 is below the 21. 21 is below the 50 here, and the space is getting wider and wider between the 8 and 21. So with this candle that closes here, getting in right there, the open of the next candle, which would have been right there. Okay, do you see that, everyone? Getting in right there, taking a sell trade, you would have made 200 and 40, 50 pips. I mean, that's pretty darn good. Okay, so now what you got to do if you want to see price continue going down further, you got to wait for price to come below the low of this big black candle, or wait for a pullback, which probably might be the best thing to do. Okay, and that is the U.S. Japanese. Really quickly, we're going to switch to. You can see how we missed a train on the LEOD. Your entry was right here again with that big, with this black bearish engulfing candle. You see how it kind of just engulfs the previous little white candle? Also has broken a trend line. So, you know, great opportunity, really simple to see. If you would keep track on this chart every single day, you would have the opportunity to get into trades like this. Okay, now I'm going to take a quick look at some of the other Japanese cross pairs. Okay, hold on for a second. Okay, I quickly want to look at the Japanese crosses. Here's the Euro Japanese Yen, and you can see prices come right down, showing Japanese strength last week. I mean, price I believe is going to keep going down further to at least to test a previous swing low here. But once it gets past here, it's going to go down much lower. So there's room, and remember, this is the weekly chart. So let me just move that over for a second. So there's room for price to go down at least another 200 pips or so. MACD has crossed the zero line as well. You can see that, and daily chart. Um, this might be good for a pullback though, so you can watch that. To either take a break to the downside break of this previous candle here, so it's a breakout trade, or wait for a pullback, then look for selling evidence. Another one, the Australian Japanese yen, huge movement last week. This is the daily chart. You can see that right here. So looks like price can still come down quite a bit. Once it pulls back, you can wait for the pullback to end and look for selling evidence, or sell below this big black candle right here in the wick. But if it breaks that, it can still go down another 160 pips. So some good opportunity there. If you want better trade opportunities, switch down to lower time frame charts, 4-hour charts, 1-hour charts, if you have time to trade during the daytime. Okay, here's the New Zealand Japanese yen. Same thing. Look at that. The New Zealand pair is one of the weakest last week, and look at that. This is a huge black candle right there. This is the weekly chart. Let me switch to the weekly. And I want to zoom out. Let's see where we've got. Okay, we are at, so caution here, we are at previous support. You can see right here with the low here, low here. However, if it breaks this area right here, then price certainly can go all the way down to this area right here. Okay, so lots of room to the downside. MACD is below zero. So again, you can wait for pullback to the upside, then look for selling opportunities to the downside. And finally, the GJ, which is the British pound Japanese yen. Again, another huge down candle. Let me zoom out. And again, to the downside, we can go to right about there. Okay, so that would be the next major area of support. Zoom into the daily. And again, same as the other Japanese pairs. Oh wow, this one's a really big. This one's got a lot of room to move. 450 pips once it breaks the low of this. So this has lots of room to the downside. You can see the histo bars are getting larger and larger. Okay, but again, you want to watch what you're doing. Either wait for a pullback and then selling evidence, or just take a breakout to the downside here. Let me zoom in. And so right below the wick of this black bearish candle right there. Okay, so these are your Japanese cross pairs. Perhaps good opportunities for either counter trend trades for this coming week, or waiting for pullbacks and then selling evidence to the downside. So that's it for this week, guys. Send me your emails if you want any other currency pairs for me to look at. You can do that as well, and I'll be more than happy to look after you. Take care. I'm also enjoying the classes. I'm once again teaching in school, and I'm meeting many of you back in class again. So terrific. I love that. And have a great trading week, and we'll talk to you again soon. Bye for now.